What's up everybody? Welcome to the Stocks channel. My name is Corey, and Friday in the stock market we see a continuation of the strong bounce, and here comes the bulls. What should you expect to happen next, and how will you know this is the real deal bullish breakout? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so Friday in the stock market we saw SPY going up 0.78%, and we did see a continuation of that strong bounce with 4 strong green candles in a row, all closing near the high of the day and breaking through some very critical resistance. So there's a lot to unpack, and we're going to be going into a lot of detail today to show you exactly how you know this is going to be the real deal breakout. So the first thing you need to pay attention to is that SPY now has a higher low and a higher high, and we're starting to see some very nice, decent high volume buying, especially if you combine it with the high volume buying that we saw back near the end of February. So this is very clearly a higher low than this 411 level, and now this is very clearly a higher high forming. So we're starting to reverse the bear trend, which is very evident in the moving averages. You can see the 20 simple moving average now is positively sloping. The 5 EMA and the 13 EMA cross back above the 20, and we now have daily price action 2 days in a row back above the 50 EMA. And the 50 EMA is also now positively sloping. So that is a lot of bullish developments, and you're getting the bullish breakout in the price action, but this isn't something you just want to FOMO into and chase. Now, one more thing to think about, because I see people doing this a lot of time, and you can even see it in the comment section, is a lot of people are saying don't buy this dip, SPY is going to $400. And if you really think SPY is going to $400 and you're not buying around 411 to 416, you're really trying to time the market way too carefully. If you didn't buy at 416 because you thought we were going down here to 400, you missed out on the possibility of losing $16, but now we're about $40 higher, and you really missed the monster bull rally by just being too worried about going to 400. Remember, as a long-term investor or even a longer-term swing trader, you don't need to stress about trying to catch the bottom perfectly. So just a little lesson in risk management: don't be afraid to scale in slowly, and make sure if they're long positions, then you actually understand their long positions and don't try to catch the bottom. I'm not saying we're not going down to SPY 400, but it's significantly less likely now that we're getting the bullish breakout, and we do have that confirmation of strong support around 416. You can very clearly see SPY had a nice double bottom here, broke out above the high and just started to run. So this is definitely evidence that bulls are buying the dip, and you're starting to see very bullish price action. So from here, don't just FOMO in if you miss this rally, because you're more than likely going to get a much better buying opportunity right around the corner. You can see this is a strong rally off the lows, and the next thing to confirm this is a real deal bullish breakout will be a nice little bit of a low volume sell-off, and then eventually test that breakout level, continue higher, and take out the previous high, and that will be confirmation that we're going right back into a bull market. Remember, just because we're bouncing off the lows and getting a bullish breakout doesn't necessarily guarantee that we're actually going back into a bull trend. By the time we know we're in a bull trend, you're going to miss the majority of the rally. So you need to know what your plan is going to be starting now, and you need to know exactly how much you're going to risk in the event that we do go back into a bull market, if we do hold up above a low volume sell-off above critical support and then start to bounce. So if you're thinking about getting bullish in the longer term and you still haven't started buying, especially near these lows, you're looking to buy on the next pullback, and you want to watch for critical support levels right around 438 and the strong support zone of moving averages right around 430. And of course, you know we do have that strong support right around 428. So any of those levels are going to be very critical support, and we need to see price action holding above at least 416, because remember, a bullish scenario needs a higher low and then a higher high. So we could get a really deep retracement that could take us all the way down to 420 or right around that zone, but it's not required. So we could see a very shallow pullback that only takes us back to the 20 simple moving average. And now that it's positively sloping, that's going to be dynamic support, and it's going to continue to rise each and every day the price action is above 430. So look for the possibility of a strong bounce off that 20 simple moving average and a retest of the breakout level right around 430 to 432. And if we go lower than that, then you're looking for the strong support right around 428. Remember, as long as we find support above the previous low, it's still going to be a bullish development as long as we get a bounce and come take out this previous high. Now in the short term, we don't know that the high is in because we just see price action going up each and every day. So we're going up until we see a reversal at resistance. So the areas you now want to look for resistance are right around 446. And if we break above 446, we're likely heading all the way back up to 453 or 457. The bulls used a lot of energy on this 4-day rally, so I wouldn't be surprised to start seeing resistance soon, and then the bears starting to attack around this level at 446. If the bulls get back above that level, it's going to be an extremely bullish breakout, and you're going to see a lot of short squeezing, which will take you back up to about 453, so watch that level closely. Now, in the event we get that reversal at resistance, you're looking for that pullback on low volume selling. It might happen in about a 3-wave low, and then you're looking for a sharp reversal at support and a bullish impulse higher, and that's going to tell you we're likely going into a bull rally for the summer. So watch all of this price action accordingly. And of course, the bearish scenario would be that we come all the way down here and take out the low at 416. And then you're very likely going to see very quick selling all the way down to SPY 400 to close that gap. So at this point, you really need to be bullish in the longer term above 416. And then you can get a lot more bearish if SPY comes all the way down and takes out that low at 416. So I know that was a lot, and I know that was a lot of information, but if you need to, watch it over many times, because this is going to be a very critical breakthrough in the next coming week to follow the price action and know exactly where we're going from here. If this is the real deal bullish breakout, and it is starting to look like it is, you're not going to want to miss the next buying opportunity, because we could go all the way back up to all-time highs by the end of the year if this is going to be the real deal bullish breakout. Alright, so jumping over to the NASDAQ 100 triple Qs, you're going to be looking for the same exact price action I just went over on SPY, but you're just going to be looking for different levels. You can see the 20 simple moving average did turn around and it's now positively sloping. So you're going to have dynamic support right around 336 to 337. And if that level continues to rise each and every day, you're going to have to pay attention to where it's at. The breakout level is right around the 330s. So you're going to have strong support anywhere between 330 and about 337, all the way up to about 341. In the most bullish scenario, you're going to see a shallow pullback, but more than likely, I would expect to see the next pullback being somewhat of a bear trap that could go a little deeper than you would expect. So I would expect to at least see the triple Qs coming down to at least 338 or possibly lower. The low we need to stay above is all the way down here at 318. So just like on SPY, as long as we're above triple Qs level of 318, I think you need to be bullish. Below 318, we're likely going much lower, because that will be a very prolonged bear market, especially because we're near the end of March. So overall, I think you need to be getting a lot more bullish and expecting to see a higher low. And that higher low should be contained above 318, with the most likely scenario that it stays above 330 to about 338. You still have strong support around 340, and we're right at resistance at the 50 EMA. So critical resistance from here is right around 350 to 352, all the way up to about 356 to about 363. I don't expect to see the triple Qs just going straight up, blasting through 367 and going all the way back up to the 380s. So expect to see that low volume sell off and that pullback in the very near future. And that will be your next best buying opportunity, because you'll know exactly where to set your risk. And if we do go back on the bull, you'll have a very nice entry for a very good long trade. On the Dow Jones, we were up 0.5% and we slammed right into that resistance level at 347. And we're starting to see confirmation of the bullish breakout in the Dow. We're back above the resistance trend line, and we're 2 days back above the 50 EMA. And you can see all the moving averages are now turning around and starting to be positively sloping. So we're starting to develop that bull trend. In the scenario that we get the pullback from 347, look for strong support right around 343 to 340. And our 20 simple moving average is down here at 336. Below that, you need to see a higher low above 329 to 330. So that'll be your line in the sand level to stay above, to stay bullish, especially in the Dow Jones, which is just now starting to break out. Above 347, we could start to run to about 350, but that's going to be very strong resistance and will likely lead to that pullback. We still have that gap to fill all the way up there at 360, so it shouldn't be surprising that we're starting to see the bullish breakout, because we do know that gap is very likely going to get filled, and it looks like the Dow Jones wants to fill that gap by the summer. In the Russell 2000, we were up 1.05% on Friday, and we did get the bullish breakout in the small caps as well. We have a daily close back above our resistance trend line, and we got a daily close at a new daily high back above 207. So you can see bullish breakouts across the board in all of the indices and even the small caps. We got that breakout on increasing volume, and we're starting to run into resistance right around this zone. But the bullish breakout above 207 is going to be a close above 212. I don't think we're going to run straight above 212 without a pullback. And we do have a huge gap to fill all the way down here right around 195.7. So there is still going to be the possibility of a bear trap before we see that next leg higher. So look for a rejection around 207 or 212. And then if we do start to pull back, you're looking for strong support around the breakout level at 204, 200, 197, and of course that gap close at 195.7. You're seeing a lot of bullish breakouts. So if we get the successful retest in the higher low, you're going to see a confirmation of a bull rally in the summer. The low to stay above in the small caps is about 193, so that's going to be your make or break level for strong support to maintain the bull rally. On the ARKK ETF, we were up 4.5% on Friday, and we did get bullish breakouts in the ARKK ETF as well, because we're back above the resistance trend line and 2 days back above the 20 simple moving average. Just like on the small caps, I don't expect to see the price action getting too far above the previous high, which is right around $70.50. From there, expect to pull back down to about 64 and possibly all the way down to close the gap at 54.7, because we do know that gaps get filled and that gap is coming off of a previous low. So there is the possibility we get a deep retracement to fill that gap before the next leg higher. Above 71, you need to be getting a lot more bullish, and the next bullish breakout above 71 will be back above about 77.7. On the VIX, we see the VIX continuing to get crushed, and the VIX is down 7% on Friday, closing just below 24, so that is a bullish development. Remember, the two bullish developments in the VIX were a close below 24, and confirmation of the bull market will be the next time we close below 20. However, you can see we're sitting right on top of the support trend line in the VIX, so a bounce in volatility here goes hand in hand with the pullback that we're expecting, especially now that we have the bullish breakout. We need to get a pullback to retest the breakout as support, get confirmation that the bulls are back buying the dip, and then we can start to rip higher and see a bull market in the summer. So expect to see a little bit more volatility in the short term, and as long as volatility can stay below about 30 to 32, it's a buy the dip scenario because you're buying the dip on volatility that's a higher low more than likely. Otherwise, we'll see the VIX breaking out and getting back above 32, and then we should expect to be seeing a lower low and a continuation of the bear market. So there's going to be a lot to pay attention to next week, so make sure you know all of these levels and you're watching very closely, because nothing is going to tell you what to expect better than watching the price action. As I always tell you, price action is king and everything else is completely noise. On Bitcoin, we're currently flat, sitting right around 42,000, and that will be the evidence of a first bullish breakout. If we could see Bitcoin closing above 42,000, we should more than likely retest 45,000, and on a close above 45,000, we're back on the Bitcoin bull. We'll regain the bull trend, and we'll likely start running up to resistance in the 50,000 range, around 51 to 53,000. So you're getting very bullish on Bitcoin above 45,000, but remember, we're still at resistance, and there's still a possibility we come down and retest support, and you're looking for strong support around 40,500 and 37,000, and below 37,000 you're getting very bearish on Bitcoin, and you're getting ready to see Bitcoin trading all the way back down there around $30,000. On NVDA stock, we're up 6.81% on Friday, and we see NVIDIA getting a very bullish breakout, and you could see confirmation of that double bottom because we did get a confirmation breakout above 244, and we're already hitting our price targets up here around 267. Above 267, it's extremely bullish, and we're more than likely going to see NVIDIA quickly running up into the low 300s. However, we do have a gap to fill to the downside, and we're getting a lot of energy used up on this run. So look for strong support right around 246, 244, 236, and the gap closed at 230. And if we bounce off of any of those support levels and continue higher, you want to buy the dip because this is more than likely a very bullish stock that's going to run into the low 300s on a break above 267. On Tesla stock, we were up 3.88%, and Tesla did get the bullish breakout back above the critical level at $900, but it's only the first day doing so. We're back above the 50 EMA and we're back above 900, so this is extremely bullish, and we're very close to invalidating the price target at 592. So a couple more days back above 900 or a breakout above 937, we could throw that price target at 592 in the trash can and say goodbye to the double top look. So the Tesla bulls are trying to scare away the bears, and they're doing everything they need to do. From here, we need to hold above support right around the 890s all the way down to 827. And as long as Tesla can stay above 827 and prevent breaking down below the lows at 760, we should see a bull market returning to the stock, which means we could run all the way back up to about 1100. So you can see the bulls are coming back across the board, and you're starting to see it in all of these stocks. So continue to watch these low volume sell-offs, and if we hold that support, you want to get very bullish. On Apple stock, we were up 2.09% on Friday, and we did slam into the 50 EMA, and that level is acting as resistance. You're getting a lot more bullish on Apple above 165 and then a back above 168. And there is the possibility we need to pull back before we get any more bullish price action. On the pullback, look for support right around 162 and 157. And the low we need to stay above is now 150, because as long as we're above 150, we're more than likely heading back into a bull market. On the financial sector, we're up 0.23% on Friday, and the second day in a row back above the 50 EMA. And we're starting to see the moving averages going positive. From here, we'll likely see a pullback that could close the gap at 37.5, but overall, this is a bullish development, and the financials are looking very strong back above the 50 EMA. On the industrials, we're up 0.38%, 3 days in a row back above the 50 EMA and starting to develop that bull trend, so it should be a very quick trip to come up here and close that gap at 106. The healthcare sector was up 0.62%, starting to break out and confirming it's developing a bull trend, and we're very close to running up here and closing this gap at 141. The energy sector was down 0.09%, still holding on to the bull trend and still above the support trend line. But overall, the weaker the energy sector becomes, the more likely we're going to see a continuation of the bull market, because if the energy sector rolls over and dies, that money will go to other sectors, which is much more bullish for the S&P 500 because there's a lot more weight by market cap in other sectors in the S&P 500. So jumping back over to the S&P 500, you can see bullish developments and bullish breakouts across the board on everything we covered today. So there's no reason you should be overly bearish at this time. Yes, we are due for a pullback, and yes, I'm expecting a pullback, but a pullback from here is not bearish, and you should not be trying to short the pullback expecting much lower prices. You should be preparing to buy the dip on a successful retest of the breakout. If we start to see high volume selling and slicing through all of that support, this was all just a bull trap and we are still going lower. But we're seeing bullish developments and we need to follow the price action. And the price action is telling us it's time to start thinking that we're getting a bullish summer. So stay objective because next week is going to be extremely critical that you pay attention to the price action at those strong supports and also pay attention to the volume. If we start to sell off on very low volume, that will be bullish and you'll want to start buying the dip. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. All of this market volatility means it's the best time to be a bank member. So if you're interested in joining or want to find out more information, you could do so by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis, and I'll be bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.